RBI. And even from the index future point of view, they were marginally stopped with some thousand odd contracts, which is nothing, which we can actually ignore. So even though when market was correcting, the data never corrected. So that was one thing which I observed. And secondly, Suresh, like over the last couple of months before, whenever there is a rally on a weekly time frame, this rally would sustain for 23 to 24 weeks. I've observed for the last so many times that minimum this rally will sustain for 23, 24 weeks. And the current rally is only completed the 18 weeks. So I'm of the opinion that at least maybe we will be more of a range bound. We'll not see a big upside, or maybe I don't believe we will see a sharper correction. We'll be in the range bound for the next couple of weeks till this March expiry is over. I don't think we'll see a major fall in the market. Maximum the corrections may come to 22,000 on in an extreme scenario, or it might break that. But right now, I would take that it will be more of a range bound kind of activity. Bank Nifty last week, we saw that it almost went up to 48,000, then it corrected back. So Bank Nifty has now filled the gap area. This gap was formed basically because of the HFC Bank witnessing a gap down. Because of those reasons, we had the gap down in the Bank Nifty, and yes, in the last week we have filled that. I believe we would be more in a range bound kind of a market. I didn't expect such a sharp move in the very start of the day. I just thought it would be some little bit of negative bias, and maybe in the second half we might see some recovery. But this recovery of 80, 90 points on the Nifty is quite promising. 22,500 is the trigger. If 22,500 is taken out, then again there are call writers who will be unwinding their short positions. So we'll keep a watch on those points. I believe if 22,500 is taken out today, then we'll see another 200 points rally on the higher side. So that would be the immediate view for the next 3-4 trading session. Lower side 22,200, on extreme scenario 22,000. So that would be the demand or maybe the support zone.
All right, and as we speak, it's Nifty Bank that's actually, after yesterday's sharp shakeout, it's, leading the charge. It's back above the 47,700 levels, up 0.81%, and SGFC Bank, which dragged the index down yesterday, is up about 2%. So, I mean, clearly it looks like, at least if not for Nifty, if it was a one-day shakeout, it looks at least that's what the setup is for Bank Nifty. But we'll move on, and we'll move on to ITC because it's facing some bit of a price pressure this morning. It's down about 2%, in fact 2% and falling, and this is on the back of British American Tobacco. According to reports, it's looking to sell about $2 to $3 billion worth of stake in the company. Now the divestment is likely to take place via block deal, and as we know, such deals are usually at a discount to market price, so there is of course going to be some bit of a price pressure there. And Brijesh, it's also going to be a sentimental hit for the stock because BAT at 29% is one of the largest stakeholders in ITC. But even if you look at the stock after that brilliant rally that we saw in the previous 2 years where the stock essentially doubled, is down by about 14% in 2024. What's your view on ITC? I mean, is the end near? Can we, or is it, once again entering into that years of, consolidation which lasted for several years?
So to be very precise, from the start of Jan, the ITC has started to see the profit booking, and eventually till the mid of Feb, there was a correction. After Feb, we saw some kind of buying, and we believe that this can be the early stage of bottoming formation. But then with today's news, the ITC has broken that 400 mark. So definitely from the time being, maybe for the next couple of weeks, ITC from the charts perspective, it is looking weak. I would take a negative trade on the ITC because 375 to 370 is the next support level which I'm watching at. So until and unless 400 or maybe 410 is a precise level, until and unless 410 is not taken out on the higher side, or we see a very strong close above 410, I don't think ITC will see a good bounce, or maybe that big reversal will not be seen. Right now, I am of the opinion whenever it bounces to 400, 405, 408, with a stop loss of 411, the traders can look for the shorting opportunity, because I believe 20-25 points further corrections will be due. It will take a couple of weeks, but then that is a directional view. Closer to 375, and looking at the overall market sentiment, then we can again review the position and slowly the long-term players may jump into. But then that's a wait and watch kind of a scenario. But at this point, we'll be talking of another 20-25 points correction from the current level.
Good morning, Brijesh. Another company that is betting big on India is Siemens. Over the last 6-7 years, the investments they have made into India have been over $1 billion in that tune. They have recently got an order from Indian Railways to supply 1,200 electric EV locomotive engines. But when I look at the stock price in comparison to their peers, Siemens does not seem to be doing too well, even when you compare it to ABB, Hitachi or General Electric, T&D India. Leave aside BHEL, which is an Indian company. How do you see Siemens performing? Do you see it floundering despite all the big bets that it is making into India, or do you see a reversal?
Sir, if you check the Siemens from the month of November, it has started to move from the level of 3,300. We are now trading at 4,700 mark. So what we can say for the Siemens specifically, it maybe we can see some profit booking coming in the Siemens. So the maximum correction which may come in the Siemens would be somewhere close to 4,300 mark. So I believe structurally the charts, maybe it might be a slow mover, but then structurally the charts are positive. The trend is there is no way weakness in any time frame. So I believe this profit booking may maximum come by another 300-400 points, odd points from the current level. Closer to 4,300, I believe there is again a demand zone from the charts point of view. And the trend remained positive. So maybe if somebody who is looking to 5,000, 5,500 level, if that is the directional view, so one should look to add positions on those corrections. I'm taking this view because there is no reversals and there is no structure or no change in directional trend. So I believe corrections should be viewed as a buying opportunity. It might be a slow mover, but then it looks more positive on charts.
Slow mover, but on the upside. Brijesh, tell us, what are your picks for the investors today?
So one is from the banking space. So IndusInd Bank is something which I'm positive. I believe one should take a long position, and even the bank Nifty is reversing from the current level. With the stop loss of 1520, I would play for 1590 on the higher side. So that would be the first pick. Next is that momentum pick in the Asian Paints. Would go long at the current price with a stop loss of 2810 for the target of 3010. And lastly, the Shriram Finance. So again, this is a momentum play. So one should go long at the current price with a stop loss of 2435 for the target of for the target of 2600 levels.
All right, those are the short-term trading ideas from Brijesh Ayal, sir. Appreciate your time, appreciate your thoughts. Thank you for joining us here on News9.
Thank you.
But with that, let's slip into a short break. On the other side, Mohit Gang, co-founder and CEO of Moneyfront, joins us.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this. Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News9, and the markets, they are moving towards their day's high. Nifty has reclaimed 22,400 mark. In fact, it's very close to its intraday high, just about 12-13 points shy of it. Currently, it's trading at 22,423 mark, up 0.4%. Sensex, is also moving towards that 74,000 mark. I think it's just about 100 points shy of it. The mid cap and the small cap space, they continue to reel under pressure. Both indices are down, but they have moved above from their day's low. The mid cap index is down 0.5%, the small cap index is down 0.9%, and volatility, that has come down. India VIX has fallen below 14 level once again. But yesterday it was the banks that pulled down the market, and especially HDFC Bank was responsible for about 20% of all the losses for Nifty. This morning, however, we are seeing banks leading that charge. It's the index overall is up around 1% and moving higher. Currently we are at around 47,800, and that's for Bank Nifty. And HDFC Bank, it's up almost 2%. It's responsible for nearly 1/3 of all the gains for Nifty. So perhaps one needs to keep an eye out on that. But with that, let's also bring on board Mr. Mohit Gang, co-founder and CEO of Moneyfront. Thank you for joining us here on News9, Mohit. I want to begin by asking about the inflation data. I mean, it's due to come out both in India and US today. Do you think any surprises on the negative side, especially in the US, could be the tipping point for equities? Because the markets both here and there, they are looking rather exhausted. In US, the tech rally seems to have slowed down a bit. For us, there are cracks that are starting to show in the broader markets and the PSU names. What's your sense of things, sir?
Hi, Suresh. Morning. Always a pleasure to be on your show. Look, so I think you're perfectly right when you say markets are neither here nor there. Honestly, I think markets are trying to find its feet, and perhaps sometimes no news is also not a good news for the markets, and which is what is happening right now. I think markets are looking for an anchor or a trigger either ways. US Feb CPI data to be released today should be a good indicator of how things could move on from here. Jan CPI was around 0.39% if I'm not wrong, and which was fairly hot from markets perspective, which means inflation is not showing signs of cool down, and Feb is expected to be at around 0.3. So I think, look, if that persists, if the inflationary pressures persist, then perhaps that's an indicator for the markets that Fed might not cut rates as soon as what the market is anticipating, and that's not the greatest of news which market is hoping for. So still hopeful, and let's watch out the data tonight. So I think only post which we can figure out which way the markets will head in terms of that news item. In India, closer to home, honestly, I think we've been talking a lot about it, that the leadership should and ideally is moving to large caps now, and moving away from mid and small caps, where I think the regulators and RBI both are equally showing some signs of cautiousness and throwing some what do you say throwing some signs to the market and to the industry bodies that they need to somehow curtail the mid and small cap froth or bubble or whatever you might just want to call it, perhaps the extra vigor which the mid and small cap segments have shown last year and have run up quite a bit. So my sense is that regulatory intervention in terms of doing a liquidity analysis on the mid and small cap funds in the market, some notes of caution which RBI has thrown on particular NBFCs in the market, and some news flows around some operators who are operating out of Middle East, and all those kind of news flows have all come together, which is kind of keeping the markets where it is. Markets, to be very honest, the headline market hasn't corrected a lot. It's just that the mid and small cap segments, the underlying stocks have seen huge beating. If you go down the ladder, you will figure out there is a lot of bloodbath which is happening, especially in the SME segment and the smaller cap stocks. And even the small cap index, if you see, is almost down 8% from its peak levels. So my sense is that leadership is switching in the market. Market is finding its anchor in the safer, larger blue chip stocks, the heavyweight names, and which will perhaps continue for some time. The only good sign I see in the market is that the leadership is again moving to Bank Nifty. After a long while, I think the BankX is something which is leading the market, and which to my mind is a good trigger. So honestly, I think we'll have to wait for the data. Right now, the market is neither here nor there, and we'll have to perhaps wait for the next trigger.
All right, and you're certainly right in saying that, the voices of caution, especially in the broader markets, they are getting louder to a point that even the, the regulator, AMFI and SEBI, they are concerned. So far, I mean, the small cap index, as you rightly pointed out, they have taken a beating, but the mid cap, index has been relatively insulated. I think it's down about 2.5% from its recent peak, pretty much in line with what Nifty has done. I mean, apart from today's recovery, the index was also down about 1.5% from its record high levels. But we also have this stress test result of small and mid cap funds, which will come out on Friday. And for the benefit of our viewers, this test is basically done to show how quickly these funds can, liquidate. I mean, Mohit, coming to you, perhaps the market will likely be on the edge, considering that this stress test results will come out on Friday, right?
Look, I think there is some news which is already out in the market. If you check social media handles, you'll find certain handles who have already posted some results on stress testing, though those are done by independent advisors or maybe independent agencies, and perhaps what SEBI puts out will have much more weight in the market domain. But my sense is it is not a unknown kind of a thing that small cap stocks and small cap schemes have a lot of liquidity challenge given the depth of the Indian markets, right? So I think investors are fairly aware of it and cognizant of the fact that it is not very easy to redeem positions or sell small cap holdings in times of crisis, and which is fairly factored in. Yes, small cap stress test will throw focus and light on few schemes which have this high illiquidity quotient. I don't think so. Beyond that, it should matter much. But yeah, I think what has happened, Suyesh, is it has thrown the doors of caution open in the market. Till now, only few of industry experts and media were kind of giving those caution notes that small cap and mid cap is a little frothy. But now with regulators joining it, with AMFI joining it, with too much of stress test happening, is the noise is increasing, and perhaps that is good from the market's perspective, because investors have to be a little cautious in those segments, and especially the SME segments and all those kind of micro cap segments. Those are extremely volatile, and it's a good thing by the regulator that they are checking in much earlier, so as to avoid any kind of catastrophe in the market.
Good morning, Mohit. I'll drive your attention to the tyre space, which has been in the news of late, with the government extending the countervailing duty on new unused pneumatic radial tyres by a month up to July 23rd, 2024. This duty had been imposed for a period of 5 years in the year 2029, June 2019. And that has been extended by a period of the month. The countervailing duty basically was imposed to offset the price impact of the significant foreign component of subsidies that on products and goods in this space. Now, price cuts have happened over time in quite a few spaces in this. In the truck, bus and radial tyre space, the cuts have been as much as 500 rupees and 800 rupees per pair. And for companies like Apollo, JK and MRF. Now, but when I look at the stocks in this space, not any of them have reacted in the positive today in the last few days. All of them are in the negative. MRF is down even today. So is the case with JK Tyre. So is this case with Apollo. Do you see the government giving more incentives to this industry, or do they need more incentives in the times to come, going by how the stocks are performing despite this news?
Hi Amit, morning. Look, so I think extension of 1 month doesn't mean too much for the industry per se. My sense is government is just trying and extending the timeline till such time that the new government is fully in place and operational, and perhaps that's when we might see larger measures or maybe more extension of this countervailing duty, if at all it were to come. My sense is yes, certain segments of this industry still needs protection against cheaper imports, especially I think the 16 mm rim tires or radials as we call them. So I think that is one segment which needs a lot of protection, and perhaps I think government will take due measures only post the new formation or post the elections is my sense, and that's why this 1 month extension. Coming to the sector per se, I think price cuts is not something which has happened just now. I think last year towards the fag end, perhaps near about Diwali, also there were price cuts which happened from both Apollo and JK, and I think MRF also, if I'm not wrong. And again, 1 to 2% price cuts have happened for both Apollo and JK tires again, right? So my sense is obviously industry is taking, or the market is taking note of the price cuts which are happening. Perhaps there's a price war which is out there, and the margins are shrinking. Look, to be very honest, if you're doing continuous price cuts, I think the margins are under pressure, and which is what market is kind of factoring in. My sense is one should just wait and watch till about elections to get into this segment or to this sector, and look out for new measures which perhaps government might announce after the new formation of the government. Till then, I think it's a wait and watch scenario for me.
All right, and Mohit, as we speak, RK Swamy has listed at a premium of about 13.2% at rupees 288 per share on the NSE versus the issue price of rupees 250. The listing is pretty much on the expected lines. The market was expecting a 8 to 10% premium. Is this a stock that one should hold for the long term?
Okay, Suresh, I am not sure. I thought RK Swamy was under some pressure in the morning listing, but perhaps maybe I haven't checked the prices right now. But my sense is, look, this is a very, very competitive industry. Though they are a old brand name, they are into this media game for a fairly long while. But my sense is it's a very, very cluttered industry with lot of marginal players, smaller players, always trying and chipping in. Their client list is very marquee, and that's a signal of their industry standing and their industry vintage. But honestly, I'm not very gung-ho about this segment. I still think there are a lot of new creative ideas floating around, a lot of new media agencies, a lot of new advertising agencies coming up every now and then, and a lot of disruption happening overall in this segment. So it's not something which I understand very intensely, but my sense is a very cluttered, inorganic market, and too complicated for one to figure out who will stand out in the long run. However, RK Swamy is a long name, as I said, but again, if I'm not wrong, this is mostly an OFS. So out there also, I'm not very kicked in terms of the overall way the IPO has come out, and the valuations also looked extremely expensive. So my sense is I'm not a big fan of this space and this name per se.
Mohit, RK Swamy is the first big name in the advertising space, and they are calling themselves a marketing agency now and not an advertising agency after they broke up with BBDO. Do you see, and they have at least had a premium listing. Now, do you see other big names coming into the stock market listing themselves as in the West? No big names in the advertising space are listed in the stock markets right now. There used to be Pressman, but that has also moved its business to PR and other things. So do you see RK Swamy starting a trend with bigger names like maybe Rediffusion, Everest, and maybe even JWT India listing themselves in the stock markets in India in the times to come?
Well, look, I think it'll be fantastic for the industry if we have more listed comparisons and listed peer groups. As I said, the industry is massive and huge. There are multiple players who are operating, and many of which we would not even know, Amit, as to their financials and the way they have been operating. There are good niche players I know of who have been doing some fantastic works at huge scale, right? And when we call off marquee clients, also look, I think Amit and Suresh, the problem in this industry is that when you say, okay, let's say HUL, Nestle, Apollo, whatever, Sun Pharma, Reddy's, these are the client names. Now, those are clients of all the firms. So the bigger names like HULs and the bigger FMCGs of the world, what they do is they will have 5, 6, 8, 9 different agencies doing different kinds of work. So it's not that they're limiting their work to RK Swamy itself or to JWT itself or whatever, right? So they will have contacts and relationships across the board, and they will keep weighing on across different agencies. And plus, they have so many brands that each brand kind of figures out its own marketing agency and works accordingly. So my sense is the industry is very cluttered. It'll be great if we have more listed players and more listed comparison to actually figure out what is the kind of profitability and long-term orientation of the industry. As of now, as I said, it's too complicated for me to differentiate a player from the other. Perhaps if we have 5, 6 listed names, that comparison will become easy.
Alright, and Mohit, before we let you go, 2 mainboard IPOs will hit the street this week. Popular Vehicles, which opens today at a price band of 280 to 295 per share, and Crystal Integrated Services that opens on March 14th at 680 to 715 per share. I mean, between the two, anything that you like?
Again, very complex and very different kinds of things. Look, Crystal has some peers already there. You have Cascorp, you have Questcorp, you have SIS, and you have few other players who are listed. So that's a known space, but the business is very widespread, integrated services. The good part about Crystal is they have some government projects, and they have almost like 77% revenue coming out of government things. They work for metros, they work for railways. But again, I'm not pretty sure in terms of valuations at which it has come in and the long-term prospects, given that there are a few other players in the industry and few unorganized ones also competing for that pie. But one thing is for sure, that pie is about to increase in this country massively. Right, so if you are banking on a long-term cyclical thing that pie will increase and perhaps all players will benefit, then yes. But I'm still not able to decide which one will be the market leader or which 1 or 2 names will lead the market on that space. As with regards Popular, it's only the second listing on the distributor side in the vehicle market. Look, so I think India is a 4 million kind of a passenger vehicle market, perhaps will move to 8 million in next 3-4 years. Popular commands a good market share out there, and I think good part about that is the promoters seem quite focused on services, the servicing of the entire vehicle space, but they're totally concentrated right now on the Kerala market. They're trying to expand to other states and states per se, yet to be tested on that ground. But if you compare this one with the US markets, I think the space is fairly large out there. The biggest listed player in US is about, if I'm not wrong, about almost $25 billion or something in size, and all these players are almost less than $1 billion. today. So my sense is there's a lot of space for this segment also to grow. But again, time will tell as to how many new players will get listed. There are no dearth of distributors. I think there are around 2,500 odd distributors, if I'm not wrong, by the last count in this country. So only 2 have got listed thus far, or 2 are. The second one is now going out for listing. So again, there are too many players out there. Very difficult to distinguish who will actually capture the imagination of the market. But the way they are working out popular, I think it looks good. They will also repay some portion of the debt with the proceeds, and that augurs very well for the financials of the company. So my sense is, with a very, very long-term view, yes, again, I think this is something which will come up big time in this country.
All right. Thank you for joining us here on News9, Mohit. Always a pleasure speaking with you.
Thank you.
But before we wrap things up, let's look at how the markets are doing, because we have staged a tremendous recovery as of this morning. Nifty is actually very close to its day's high. Currently, it's around that 22,450 mark. We are just trading about 10 points shy of it. The intraday high sits at 22,452, so just about 12 points shy of it. Nifty was up about 0.5% at 10:15 a.m. this morning, and Sensex is also making a move towards that 74,000. We are just about 25 points shy of it. And the mid caps and the small cap space, I mean, even though they are reeling under pressure, they are trading with cuts, but they are significantly off their respective days low. The mid cap index, if you look at it, it's up almost 400% from its intraday low. Currently, it's up about 0.4%. And currently it sits at around 48,583 points. The small cap index has also recovered by about 200 points from its day's low. It has reclaimed that 15,300 mark, and I think at a time like this, when there is a lot of uncertainty, and especially where we have a big data release coming out today, retail inflation print for India for the month of February will be out, and overnight we'll also have the retail inflation numbers for the US as well. So we have got some important macro events in the next in the course of the next 24 hours. But it's good to see that volatility has declined. India VIX is almost down 1% this morning, and it's back below 14 levels. Currently it's sitting at around 13.86. And remember, just a couple of weeks back, we had been talking about it, how we were used to, staying at that elevated level of 15, 16 zones for India VIX. But over the course of the past 2-3 weeks, volatility has come down, and currently we have broken below 14 levels. Although 13-14 is a zone which is considered slightly elevated for our markets, but still considering in the context of things, and considering the kind of spike and the kind of volatility we have seen lately, it's good to see India VIX fall back below 14 levels. But let's also talk about some of the sectors, because it's Nifty Bank that's leading the charge this morning. I mean, Nifty Bank was a big laggard yesterday. We had fallen about 800 points from the day's high over there. The index continues to move higher. It's testing around that 47,800 mark as we speak, and that's a critical resistance zone for the banking index, if you look at it, because 47,800 is from where we began that 500-600 point of a fall that we saw yesterday. But this morning we are trading around that zone, and it will be key for us to keep a track of 47,800, because that will perhaps give us some cues as to what the upside is going to be. And this rally that we are seeing playing out in the banking pack, it's actually being driven by your private banks, because PSU banking index, that is under a bit of a pressure. It's down by about 0.2% or so, whereas the private bank index is moving in line with Nifty Bank. It's up 0.8%, and HDFC Bank, that's leading the charge. I mean, at this point, 40% of all the gains for Nifty is coming from HDFC Bank. Yesterday, about 1/4 of the entire fall came from Nifty Bank. So good to see a bit of a bounce back play out in HDFC Bank. The stock is up almost 2.5% this morning, currently sitting at 1460 mark, and that is also moving higher. taking back Nifty higher with it. But again, remember, today is the expiry, the weekly F&O expiry for Nifty financial services contract. So expect some bit of a volatility also there. Tomorrow we have the expiry for Nifty bank contract, and on Thursday Nifty F&O contracts will expire. And of course, we have big data lined up. So choppiness will continue. We will also get the result of the stress test which the SEBI and AMFI had mandated fund managers to go through, especially the funds focused on small and mid caps. The results will come out on Friday. So a little bit of cautiousness is expected to prevail in the market, but so far things are looking good. We are seeing that bit of a recovery. Let's just hope that it's here.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing